Well, time now to introduce the guests that we've lined up for you on Your Stock. Shahina Mukaddam is here to answer all your stock queries, and Hemant Rustagi is here to answer all the personal finance queries. Good afternoon to both of you all.
All right, so that's the call coming in on Tata Motors, but our next caller is already standing by. Akansha Jain calls us from Bangalore. She would like to know in which mutual fund she could invest 5 lakhs, I think. Hi, Akansha.
Yeah, hi. I have 5 lakh rupees and I want to invest it for a few months. So I want to know which MF is beneficial for me.
Akansha, only a few months. Could you push it to a year or something?
Yeah, okay. Like almost a year maybe.
All right, so Hemant, I've just got her some flexibility, so she can invest it for a few months, or she can push it through a year also. So what do you think? Which mutual fund?
Well, I think we can cover both the time horizon basically. If if the intent is to invest indeed for a few months, so clearly the focus, or even if it is within 1 year, let's say 12 months, the focus clearly has to be on the safety of capital. And since the intent, she said, is to invest in mutual funds, the income fund category would be ideal for her. Now within that, if the money has to be invested for a few months, as she said initially, then she can consider investing in ultra short-term debt funds. These funds typically invest in short-term debt and money market instruments. If the time horizon can be extended to 1 year, then she can consider investing in short-term income fund. These again invest in short-term income instruments. Important thing here is to choose the right option, because as we know, income funds or as a mutual fund as a category, they are more tax efficient than a traditional option like FDs and bonds and debentures. But the key factor is to choose the right option. That's because there are two important factors to be remembered here. One is that the short-term capital gain in a debt fund is taxed at your applicable tax rate. So for example, if the intent is to invest for less than 1 year, and if you are in the category of let's say 10 and 20% tax slab, then you should opt for growth option, because the dividend option, before the fund pays the dividend to you, they have to actually pay a dividend distribution tax of 28.32%. So if the money has to be redeemed within 1 year, choose growth option. If the money has to be redeemed after 1 year, then you can go for again growth option, because there the tax rate is same. But if you belong to 30% tax bracket, and if the money has to be redeemed within 1 year, then you should go for dividend distribution, because there you will pay 28.32, whereas your short-term gain will be taxed at 30%. So in this category, a couple of funds that you can consider. One is Kotak Floater long-term, and the second is Reliance Money Manager.
Okay, Akanksha, that's a very comprehensive answer given to you by Akanksha, depending on which tax bracket you fall in, so I hope that's helpful. Need to slip into a short break, but remember that you can track all the stories that we reported on CNBC TV 18 by logging on to moneycontrol.com. We'll come back and address more of your queries.
Welcome back to Your Stocks on CNBC TV 18. The markets are not doing much in today's trading session, and that's some news coming in with regard to Uttam Galva, but that's not of any significance. They just came out with their numbers. Top line looked good, but in fact the profitability took a bit of a knock. But we have our next caller that's standing by, I believe, and I think it's Devika. Devika calls us from Mumbai. She has a personal finance query. Hi, Devika.
Hi. Hi, so this is my question, right?
Yep.
I've invested in an SBI FMCG regular growth mutual fund for about $1,000. Now, should I continue with it or should I switch over?
All right, and do you have a time horizon?
Sorry? No.
No. All right, Hemant, you've heard the query. What do you think?
I think two important things there. One is that the money is being invested, as the name suggests, in a sector fund, FMCG fund. The second, she says that she does not have a defined time horizon. I think, which is obviously not the right way of investing in any equity fund. First thing is very important that you must have a defined time horizon, and that has to be longer term, at least 6-7 years or even more, especially when you're investing through SIP. Now, why it is important is because it helps you in tackling volatility. From time to time when you're faced with volatility, if you don't have a defined time horizon, at times you find it difficult to continue in the fund. So I think first thing you need to do is to really have a clearly defined time horizon. Second is you're investing in a sector fund, and if the intent is to remain invested in a sector fund in the current scenario, my recommendation would be that go for an infrastructure fund or a banking fund. I think those two will do better than FMCG. But if you're a small investor, if you're not really an experienced investor, then my recommendation would be to even review whether you should be investing in a sector fund or not. Because when you go for a well-diversified fund, what typically happens is that your money gets diversified into different sectors, and a good fund manager will always keep realigning the portfolio to make sure that you benefit from the emerging trends in the market. So if infra or banking is going to do well, he will increase his exposure there. So as an investor, you benefit from that. So I think in that case, I believe that you should be looking at some well-diversified fund rather than investing in some sector funds.
Okay, that's the view coming through on. Thanks so much for that, Shahina. That's the advice coming through in Kotak Mahindra Bank. Before we slip into a break, here is our closing bell money control question of the day.